Hi everyone, welcome to ELI, the place where you get your daily dose of inspiration for entrepreneurship. And today we have with us Mr. Anurag Sinha, who is the co-founder of FPL Technologies, a fintech startup reimagining credit and payments from first principles. Hi Anurag, welcome to ELI.
Thank you, Priya. It's very nice to be there on this platform.
I would request you to introduce yourself to our audience, please.
Yeah, thanks, Priya. So, great to be here. My name is Anurag. I'm a co-founder, CEO of a company called FPL Technologies. Actually, FPL stands for First Principle Labs. We wanted to put up a name which kind of signifies the way we are, solving the problem. And we are a team of five now. We started with three co-founders, now expanded the team to five leadership team. They're all ex-bankers, so we've been part of the teams on the other side. When we saw the growth of retail banking in India, and very particularly over the last 3-4 years, when we saw that a lot of consumer banking interfaces are being developed outside the bank, and there is a reason for it because it's quite iterative process. And while banks are very strong in building robust backend systems and also automating the middleware, the front end is where it is more dynamic in nature. We thought it's probably a better way to come out of the bank and build it from scratch. So we run to, the problem we are solving is uh, India is a young nation, with lots of aspiration for young Indians, and naturally the income levels yet to catch up because they're young. So there is a gap of affordability to bridge, which is what we call it, digital credit or other credit gap, which all of us are trying to solve. But we took a step back and say, we're dealing with a young population, lots of aspiration. For us to solve at scale, we have to approach the problem in a holistic manner. Not only we have to solve for credit issuance, we also have to solve for credit education and credit management.
Hmm.
And that's why we launched two products. In fact, the One Score product, which was the first product we launched as a company, is a credit score product, which is like a tool in the hands of people to understand their credit very personally, and also guides them how to maintain your credit health in a nice manner. And the second is, of course, a product called One Card, which is in partnership with banks. We issue, it's a credit card which allows people to access credit. Credit card is a quite a flexible product, and it allows you to, build your credit history in a nice manner. Also, access flexible plans like EMI, revolve and things like that. So this is the two products, and they're quite correlated to each other because, as I said, credit card is a very long tenure product. It is a very important product in people's life to build a good credit history so that they can access more forms of credit as and when their life grows.
Hmm.
And credit score is a tool to inform people how to manage their credit health. So that's how we're serving. We are a full stack company, approach the problem through technology, because frankly speaking, both these categories exist, but we have reimagined this using technology, and the objective is to approach, or rather solve for a mobile first customer. So we are a mobile only product.
So before we talk more about FPL technologies, I'd like to set the context for the audience. Can you explain what is first principles?
Okay, good, very nice question. So like, first principle is, in a way, starting from scratch and looking at the problem and come up with a solution. And very important for a team like us, because we are solving for a category which is already existing. So we have to look at the problem and say, if at all we have no background to it, how would we like to solve for it, especially in the context of young customer. Let me give you an example. Like, if you talk about, let's say, credit score, it's almost a 15-year-old product now. The
Hmm.
first credit score came in late 2000s. And but for the first 10 years, credit score was largely used by lending industry to score people. It's basically amalgamation of your past payment history,
Hmm.
and then people take calls based on that. But what has happened in last 5 years, this information is available to consumers also directly, so that they can understand about a credit health. And how it helps is, in the context of today's generation is that when you need credit, and if your score is not good for any reason, it could be like you
Hmm.
didn't access the credit well and you missed, it's too late to fix it. So
Hmm.
you have to start this journey beforehand. Now, this started somewhere around 2017 when RBI, allowed, customers to, rather consumers to access their, report directly from bureau, which is called direct to consumer reports. So we were like, we built out this interfaces around 2019, where, it became the largest platform for people to track and, understand. The other thing is that credit is a complex subject. Yeah, actually, personal finance itself is a complex subject. Credit is even complex. So, we wanted to make sure that we are position ourselves as a tool in the hands of customers so that they can actually look at the data and get
Hmm.
insights and then plan their financial lives and all that. So that's what I call it at first. But similarly, if I talk about a similar example on the credit card side, and the credit cards exist, as you know, there are many banks who issue credit cards. So when we were approaching launching this, okay, we wanted to improve the customer experience for the customers. I'm like, rather than looking at some existing stack, and then build a mobile layer on top of it, we built out from the scratch. And the reason why we built it from scratch is because most of the tech stack in credit card products are all built in 90s in US. The context
Hmm.
of theirs in India is very different. I'll probably take another example to illustrate my point. Just look at the case of add-on cards. Now, in
Hmm.
India, only 9% women work, but they control large amount of household spends. And so the only way to get credit is if they get associated with a primary member who's income generating. Now, this problem doesn't exist in developed markets because everybody has their own income and they get their own card. Now, in India also we have add-on cards, but like for second factor authentication, the OTPs for add-on cards goes to primary. Now, it's the whole purpose gets defeated. But why somebody not solving it? Because this problem is not there in developed market, and the tech stacks are built in developed markets. This is
Hmm.
very different than, let's say, a core banking technology in India. All the core banking used by banks in India is all built in India by people like Infosys, TCS, Wipro, while card stacks are not built in India. So, and this is what we call it a first principle, that you ought to look at the problem, which is you're solving for an engagement oriented transaction credit for customers. And if you have to reimagine it today, how do you go about doing it?
Right. So, what is the current scale of operation in terms of how many people are using the platform and what kind of transactions are happening?
Yeah. So as I said, we run two products. The one score is the first product, which is our primary product, which allows people to understand credit score and track their financial health. We launched in July 2019 in public, and we have now more than 10 million users on that. We're one of the largest app in our category. We work with two bureaus, Credit Experian and Sibyl, which are the two largest bureau in the country. And almost 1.5 million plus people use our platform every day, every month on one score. We've built lots of features around, helping people understand why score goes up and go down, and what can they do to improve upon. All of this is machine driven, so there's no human interaction happening. It's all happening through an app interface. So that's one. Then the second product is one card, which we launched, almost a year and a half back. As you know, it was just after pandemic one. Actually, we were supposed to go live around March. We had a wait list, so almost 3 lakh people signed up, and then pandemic one happened, which was like a big unforeseen event for credit industry and for everyone, but especially for credit industry. So we've now scaled up to close to 200,000 credit cards in partnership with multiple banks, and we'll be growing up. In fact, this is growing every month, and we see a very healthy transactions on this. By far, the activation rate, which is like how many people are active, as well as spend per card, is one of the highest in the industry. In terms of scale, we are around now 220 people, in the team. Mm. And a lot of them actually got hired during pandemic
Mm.
because that's when the growth of the company happened. And I think we are based in Pune, by the way. And most of us operate from here as well.
Okay. Can you give us a perspective on how do you or how did you fund your operation till you became profitable, or are you profitable as of now?
No, no, we are not yet profitable. Since we are a B2C consumer company, also credit card is a, like delayed payout product. What do you mean by that? Because you issue the credit card today, all your costs are upfront, and then over a period of time, as people stay with you, you make money. We are not profitable as of now, and we were lucky to convince venture capitalist firms to back us. So we took a seed round from Sequoia and Matrix Partners, right? Very early beginning. Then we raised a subsequent round later. So we've raised multiple rounds post that, and that's how we have been funding our operations. So that is to run our operations. The balances on the credit cards are funded by the bank because that cards are issued in partnership with banks. Yeah.
Okay. Uh, Tell us a bit about the evolution of this venture, how it all started, what was the initial idea, and who are the initial few people who came together to build this.
Yeah. So I think to give us a background about idea. So we're all ex-bankers. I've been part of the banking industry for long, so was part of the payments and unsecured lending teams. And I had a previous startup as well where we had a different credit product to the customer. So I actually got a very specific insight that for credit, people take loans for very specific needs, and these are time sensitive needs. Let me explain. For example, if you're looking for a car, you take a car loan. Looking for a house, you take a house loan. Looking for a TV, you take a loan for TV. Now, whatever be your interface, how good you build, if the consumer does not remember you when he's looking for a loan, then you have to target him through different platforms. And that's
Mm,
why the cost of acquisition always remains high. Now, in the bank also, when they get customers from third party sources, the cost of acquisition is reasonably high. But what happens is that they have their own set of customers already in, which are primarily coming from savings account base, or customers have borrowed before, and they are able to cross sell to them, which is what brings down the cost of acquisition slightly lower for them. So this company, when we were thinking of, we were very clear that we want to solve the credit problem through an engagement-oriented product rather than a disbursement-oriented product. And that's why we zeroed down on credit card as a product because on one hand, nobody needs a credit card. I mean, it's not a time-sensitive need where you get up in the morning and say, I want to apply for a credit card. But the consequently, anybody and everybody can take credit card and then use it as and when they want as a payment product, and whenever they need to get access to credit, it's all built into there. So
mm,
that's why we chose credit card as a product. Another reason why we chose this product is credit card is a very high touch product for the customer. So unlike loans, where once the loan is given, unless you default, nobody's going to call you because it's
mm,
a pretty much automated product. But credit card is a like a day-to-day product. You use it 7 8 times in a month. You pay back. You have rewards. You have offers. You have EMIs. You have disputes. Some fraud happens. It's a very very customer experience oriented product, and we believe that majority of the customer experience in the current market is linked to call centers, which
mm,
people don't like it. And so we saw this as a good tech problem to solve for our customer experience, that if we can build a good mobile interface, this customer segment who's already used to do everything on phone, they would love this interface. So it becomes a good tech problem to for a fintech startup to solve. So that's another reason we solved. The third is credit card is a very long tenure product in the sense that once you
mm.
take it, probably it stays with you 7 8 years. And
True.
the only comparable product is mortgages, in Indian financial service industry. So if you're able to crack a good customer base and have a good relationship with them, you're going to bound to make lots of money. And that's why this is such a profitable business, because if you're able to manage experience well, customer stays with you. So all of this kind of gravitated towards a technology led problem to solve, which was something inspired us. So that's why we zeroed on that. Consequently, we came to the one score idea. Actually, so one card we thought about, but then we looked at that a lot of these customers, they will be accessing credit card for the first time, or credit card is a very flexible product, but you've got to understand how to use it, because otherwise it might not be a good option for you. So we said we need to also teach our customers how to manage credit, because the whole premise that you will stay with me long because you will maintain a good credit history. So if you're not able to maintain credit history, this whole premise will go for toss. So we said, fine, why don't we build a parallel product which allows people to understand credit well? And if we are playing a long game in credit issuance, it is our job to also solve for this credit education and management product. So that's how the whole thing came together. But both these insights were there with us when we started. So we had a very clear plan. Of course, we never knew pandemic will happen, so a lot of things have changed after that. But the broad insights have remained in the business. So credit, education and management, and credit issuance. These two products together.
What are the different challenges that you have faced while building and growing this venture?
See, of course, so one is the biggest challenge. Of course, is so there are lots of challenges, but nothing meets the scale of COVID. Uh, you know, while I think COVID affected all of us individually, professionally, and especially the COVID too, where my co-founder also went through a COVID experience. My sister also went to COVID. A lot of employees went to COVID experience. So I think so that's the largest thing to do. But I can professionally, the way it has impacted is, credit card is a unsecured lending product. So the prime way banks underwrite these customers is using income and past history. Okay, these are the two big inputs which goes into.
Hmm.
Both these numbers were completely disrupted during this period. We didn't know who's actually making money or who will lose job next month. There were a lot of uncertainty around. Secondly, the bureau data, as you know, we went through a moratorium phase, and then our Supreme Court had told banks not to, report data to the bureau for a period of time. So we actually, a lot of bureau data was outdated during that period of time. So professionally, it was a big thing. How do you underwrite this customer? So that's the second piece. Third thing is, in our business, the two things are very important. One is income, because incomes are linked to consumption, and consumption is a part of consumption comes from the card, so they're all linked to that together. But because income was disrupted, and the consumption was also disrupted because people were not able to move out, and before pandemic, almost 60% of the spends in credit cards were happening in like physical world. So was a double whammy for the business. So I think we all went through the phase. So this was like everything got delayed, and the other challenges would be, I would say, like, we are working in along with banks. It's a regulated industry, so suddenly moving into a remote place to work, these are big challenges. Second thing is, the financial services data is security is paramount. How do you handle that in a remote setup, because all the work whatever we do is subject to audits by the bank, also third party auditors, and things like that. So these were the challenges, but I would say the most important thing was to ensure the well-being of employees, that time. And also early customers, like, a lot of people used to write to us, should I take moratorium, should I make moratorium, what do I do? We actually we tried to solve in our own way to build it. We built out a moratorium calculators. We built out lots of blogs and lots of educational content to tell people how to go through this period. See, I just want to clarify that the crisis this time was very different than the crisis before. Like, in my banking life, I've seen three crises. This is the third one.
Hmm.
2008 crisis was a financial crisis. Now, financial crisis, a lot of people lost jobs, but they actually had no control over it. Something happened outside and got an impact, for us. But this time it was a health crisis. We actually had no clue, and like, it was right there in our house. It was right there. So like, the almost 3-4 months took. It just took, I think, all of us to just figure out that what is happening and how long will this continue before we could react to it.
Hmm.
So naturally, unsecured industry is dependent on consumer sentiments, and because there's no security there, it is more about cash flows based lending.
Right.
So it was a tough period for all of us. But I'm happy that industry came out quite fast. In fact, last month RBI reported the data. We had the highest spend per, as a credit card industry ever. in India. So I think we've come out quite well after that.
Tell us about the different pivots that you have done to your business model.
Okay. So we are, as I told you before, so we haven't done many pivots here, but yes, we did change course a little bit here and there, but I won't call it pivots because we had very well thought out strategy both of credit score and credit cards together, and it's a very large problem to solve. So hence we didn't pivot much. Naturally we had to reorient a lot of our strategy during the period, primarily from a pandemic period, nothing else. So for example, we moderated our issuance of card. Given the scale of one score, probably we could have issued 500,000 credit cards, but it wasn't advisable because credit industry was going through a stress period, so we moderated it. We also saw a lot of customers lost income, and the score went down. So we innovated and launched a product called partially secured card, where if you're not getting access to a credit card, can you put out a certain amount of FD and you get a credit card on that. So those are, I won't call pivots. It was more of a product innovations. We did that. Moratorium was never planned in our roadmap. We had to launch, and almost 500,000 people used our calculators and all that. So I would say these are more of I would say diversions rather than pivots. Thankfully, we were lucky. Also since we chose a large problem to solve, we have been largely on course.
Speaking of product roadmap, can you tell us what is the vision forward, where and what you want to become in long run?
So one thing is very sure. I think uh, we want to be a large platform where millions of people are using it. So that's one. So scale is something very very core to us. So that is one. Consumer credit, what we call is in form of transactions credit. That is an area which we will focus on. Form factors will evolve. Like today we have launched a credit card. Tomorrow, we also supports BNPL products over our credit card platform. Tomorrow, UPI credit is a very very promising opportunity. We are already seeing people are using mobile phone as a transactional tool where they are using it. We already work with players like Google Pay, where our cards can be used by tap and pay. I think it will go into variables. So I think within consumer credit for transactions, we will expand to all form factors, whatever consumers need. And I think for a country like India, it is needed because it's just too diverse. People have their own preferences, and we don't want to solve for form factors. What we want to solve for is basically providing a good access to credit for transactions. That's one, or other consumption. The second thing is we want to make sure that all our customers understand how are they managing the credit. So we are committed to that, and that's why. So we in one score, in fact, a lot of people are asking us, can you add more data to it? Can you analyze more data and tell us? So mostly we are a credit education app. So now I think, can you push the boundary and build a financial education app where you talk about many more things beyond credit? So, but I would say though that's the roadmap. So we will be stick to that. We do not want to do too many things, but we would like to scale within the areas we're there right now.
So, recently we have been seeing a lot of growth in fintech, and last month the UPI transactions surpassed the ATM withdrawals. So, lot is happening in Indian finance ecosystem. Looking at the trends, can you tell us what are the interesting trends that you have been observing, and where do you see our India's economy and especially the monetary system going in next few years?
So I think uh, one is the reason why fintech is moving so fast is one is the penetration of financial services products is still very low. Now we had the first wave of fintech revolution in the recent past when the Jandan Yojana was done, and suddenly our savings account penetration went up, but transactions weren't happening. And then the next wave came through transactions, which was AEPS, Aadhaar based systems. UPI just came and changed the way. And while UPI is the biggest success story out of India, as we know, still only 150 to 180 million people use it. Just imagine that only 15-20% Indians are still using UPI. So imagine the level of potential it can reach. And take any products, insurance, mutual funds, credit cards, loans. So penetration is still building it up. So I think the one is that opportunity is very large. The second thing is, this is very well regulated area with very strong regulators, and for right reasons, because this involves money. But I think government regulations, banks, all the three existing participants recognize the need. The technology can increase the reach. So it is no more. So I'll tell you, pre 2000, rather early 2000, the technology in banking or financial services was more about improving the backend system, so core banking tech and all that. Then it shifted to automation. Automation was primarily to reduce costs. And like you acquire the customer, okay, and you are using ATM rather than ATM, probably use mobile banking. So it reduces the cost. Okay. But now we are talking about inclusion. This is the proposition. This is the way banking or financial services will happen. So you are acquiring customers, you are managing them online, you're assessing them, digitally. So technology is becoming the backbone, right from front end to back end, and all the three incumbents are recognizing the fact, and that is, in my opinion, is the the most important thing for the fintech ecosystems to ride on that, because this is a regulated area. I'm like any fintech who's working has to rely on the infrastructure being provided by the existing entities, right from government to regulation to, let's say, the incumbents. So I'm like sincerely believe that the digital part, or rather digitally sourced, digitally managed. Digitally managed would be almost 70-80% of the banking in very very near future. I would say 4-5 years.
Mm.
Digitally sourced will be, in my opinion, definitely 20 to 30%, and that is dependent on the pace at which the technology and mobile adoption happens. I'm like, we are at, while all of us have access to 4G networks in cities, but how it penetrates down beyond that, it's more of an infrastructure play. Products and solutions will get built, and that is a given. And we always debate in our forums that the biggest innovation is being done by the government of India. I'm like, if Aadhaar infrastructure was not there, none of us could have identified a customer digitally. And then UPI came in, became a public goods, and things like that. So I'm super bullish on it. As an individual, as well as a industry person, and I haven't seen such a strong alignment right from all the participants to solve this problem at scale. So right from government of India, regulations, incumbents, and tech companies, and of course supported by a serious amount of talent is coming in this area now. So a lot of serious engineering talent and the product talent and the data science talent is coming to solve these problems. And I think we are all lucky to have the venture capital firm backing us. But I would say still the first four building blocks are more important. So that's my belief in this area.
Next few questions we'll ask about things on the personal side of being an entrepreneur. Can you tell us how do you stay energetic and consistent through time? Because entrepreneurship is a tiring journey, and sometimes you lose focus and you also become tired of or restless. How do you manage?
So I would say three things. One, it is becomes like a 24/7 job, because you're obsessed, or rather obsessed, you're like so inspired by the problem you're trying to solve. So that is one, and that inspiration itself keeps you energizing. But on the personal front, I would strongly recommend, and this is what has helped me, having co-founders, because you always, and especially co-founders, you know them before your ventures, you have an equation, and because they are living the same life as you, and so it's very easy for you to find like a time beyond this. That's second. And third thing is of course your family. Like I always tell a lot of people that whenever I meet someone who wants to start, I said, have you discussed with your family? Because I sincerely believe you don't do the startup alone. Your entire family gets involved, because ultimately, whatever time you're taking out, you could have gone and given to them. But last but not the least, my biggest energy comes from working with youngsters. So I'm like 45 now. Okay, I've worked, and I envy the guy at 27, 28, the kind of opportunity, the kind of exposure they have today. And so if you take five of us out, rest of the company is below 29 in our company. And I just love to be in their company because the way they think, enormity of the solution, the thing, it's just inspiring for us. Probably at their age, I didn't think like that. I'm candidly admitting it. So that's, I think, is the most inspiring part. The work with very smart individuals around us and who are driven and coming up with very large solutions to large problems is truly inspiring for us.
How does a typical day look for you? How do you manage time on day-to-day basis?
So I think it's a constant journey. I would admit that I'm not perfect in that. I'm still learning how to manage it well. But and because like a year and a half back when we were in the early stage, it was, actually basically a product person. I love to spend time on the product. But given my schedule and given the scale of operations, I'm spending less and less time on the product side. So the way I'm so like personal time in the morning, end up doing some exercise is very, very important, especially if you're running a high stress job like this. And then I, whenever get a time, try to drop my daughter to school, uh, get my time with her, and then after that, it's in office. Usually, we follow a very interesting ritual amongst our co-founders that whatever, if you are in the same place, when we reach office, we actually have a tea together with no agenda. It is a ritual, and this time we just I'm like just share things which are happening in the respective areas of the company. You can call it water cooler talks or coffee talk, whatever you call it. But I think this kind of informal conversation is important. Just want to tell you that today we are operating from office, like few of our staff. But when we were at remote also, even then we maintained this habit of having a no agenda talk every day at the same point in time, almost assuming that we are in office having tea together. And I think this was really important for us to break and just keep be aware about what's happening in the rest of the part of the company. And then it's like I usually wind up at around 7:38. Since I live in Pune, I have the privilege of being very close to my home. I can reach quite fast compared to I spent my 13 years of my professional life in Mumbai, which was a fairly heavy duty commute. So after that, at home, just before I sleep, I usually end up reading for half an hour, 45 minutes. And I would strongly recommend, in fact, most of the people in our company also will recommend to take, let's say, 2 day, 2 hour off or 3 hour off or half day off whenever they want to just keep abreast with whatever is happening in your area. Because this is a very execution oriented, period for most of the startups. How do you step back and say, okay, is this good enough or can I do things a little differently?
Okay. Since you are operating in an industry where scale matters, you need the understanding of compounding effect is very important in this industry. So, can you tell us where you have experienced compounding effect during your journey of building this startup?
Very important in our industry. You know why? Because in our industry is a trust-based industry. So what are we doing in financial services? Very large population who doesn't understand financial services well. And since it involves money, trust is super important. So if you're able to get a trust of someone, he or she will recommend. So the best person you trust is the person you already know, someone like your friends, your family, or somebody, a colleague tells you. So I think both products we have seen, but more importantly, we've seen in one score. Even today, almost 50% users come organic, very high referral rates, and when we launched, our credit card waitlist way back in 2020, early 20, we launched exclusively on one score base and without any incentive and all that. And just on the back of referrals and people talking about, we signed up more than 3 lakh people on that. So I think we've seen compounding is like your customers are your best sourcing products. If you're able to get their trust, we see the compounding impact happening. That's one. Second thing, in the technology side also, like um, we spent a lot of time building back end. Now this is slightly contra thinking because The traditional thinking in startup is to build MVP and start building on top of it. But unfortunately, in our industry, especially in our product, the MVP itself is quite big. Because if you're building a credit card system, you have to get it certified by Visa, Mastercard. You have to do
Right.
security certification. You have to get audits done by the bank even before you issue the first card. When we were even looking for one score, the Experian and Sibyl will do audits on you before they allow you to touch their systems. So I think spending time on backend earlier has helped us a lot. That allowed us to scale up later on. So in the initial period, it was looks little like unsexy, uncool that you're not building features, you're spending time on backend. But I think in an industry like us, this is needed. So we have seen compounding effect both on the technology side and user acquisition side, which we are able to build early trust with your users.
Okay. Uh, as per you, what is the meaning of entrepreneurship? How do you define the term entrepreneur?
So entrepreneurs, in my opinion, is about solving a problem which excites you, uh, and everything else is the collateral benefits to it. But I think so. Whenever a lot of people come up and say, "I want to be an entrepreneur," I say, "Is there a problem you want to solve?" Okay, and especially for Indian entrepreneurs, I would give one step further and say, look for a large problem. We're lucky right now. A lot of large problems are around us. If you solve a large problem, start with a large problem, you'll be able to build a good vision and get the team behind you. See, I think we all agree that raising money has become easier, let's say 10 years back or 5 years back.
Right.
And the reason is because the early entrepreneurs have delivered success and we are getting the benefit of that because they could demonstrate the cycle of investment to returns. But I think getting the right team and talent to work along with you to solve a problem is actually a bigger problem. It was always there, but now it is even more because the first problem is reduced that. And that you will be able to attract a good talent and team only if you're able to build a good vision, and that is linked to the problem and the market you're going after. So I'm like, I can talk about many other things, passion, like working with smart people, raising money at the right time. But I think, going after a big problem which excites you, in my opinion, is the, biggest thing. Everything else is like like goes from there.
Okay. My final question to you. Uh, Tell us what are the different learnings that you have got as an entrepreneur, which we can take away from you and apply to our lives and our ventures.
One I just gave, which is look for a large problem, but I would say a bigger advice would be invest in relationships. They matter a lot. Okay, and not necessarily professional ones, even personal ones, because you know these relations you never know where the help will arise. Okay, I have been helped by many people, which I never anticipated. Because I just built a relationship long past. But people do come at the right time and they appear and help you. So I would singularly advise people to build relationships, invest in building relationships, sometimes without agenda, and in fact most of the time without agenda. Genuinely try to help people, because when you need help people will help you. So that's my second. And be truthful, be very very extra communicative with your team. Very important because they are in the same boat as you.
Mm.
um, and you need to make sure that the relationship is built on trust. uh, we Transparency helps, especially with your team and early investors, with your investors, so that they're all in the same boat, and they are going to help you, or you're going to rely on them to solve the problem. So three things: one, go after a large problem. Second is build relationships. Third is be truthful in communication. Probably I'll also add fourth one is like have long-term goal, long-term vision, because tough problems take time to solve. Like, of course, we are in a technology era where things happen faster, but to build problem a solution at scale, it will still take time. So that's something you, as long as you are training your mind, training your team around that, it helps.
Well, on this point, I think we have come to the end of our session. It was wonderful session. Thanks for joining us, Anurag, and our best wishes for FPL Technologies.
Thank you. It was very nice speaking to you and to your audience. It was a pleasure and honor to be here. Thank you.